Great, everybody. Now, our next speaker, we take a hop across the Atlantic Ocean to Spain. I'd like to introduce Harry Anagnostoros Adams. And Harry's the Chief Executive Officer of EMED Mining. EMED stands for Excellence in Mining Exploration and Development. Harry's going to tell us how he's breathing new life into the historic deposit, the Rio Tinto mine in Spain. Please welcome Harry.
Thank you, Daryl. My first visit to PDAC, and I've lost my voice for some reason. But nevertheless, our story is in the re-emerging mining region of Spain. And I'll take you through our story. We floated the company in 2005 to focus on Europe, specifically for copper and gold. On day one, it was a $6 million company with an idea and a small team of experienced people, mainly from Australia. To cut a long story short, in the period since we started the company, we've looked at hundreds of things in many countries in the space between Spain and Georgia, over on the other side of the Black Sea, and down into North Africa. We focused on two projects. One was a discovery. We discovered a large gold deposit in Slovakia, which has started its permitting phase now. And the other project is an acquisition, the once iconic Rio Tinto mining field in southern Spain. Our main focus is the restart of Rio Tinto, a mining field, and we're starting with one of the mines. As the previous speaker emphasised, I think also that it's critical to be on the ground. All of our people, all personnel live at these projects. Corporate head office is 2 people in Cyprus who do governance, compliance, treasury. But all the other personnel, including myself, live at the projects. I live in a village next to Rio Tinto in Spain. I don't think there's any way we could do what we're doing if we were not living there, frankly. The problem that, if you like, arose in Europe is that Europe lost confidence in mining, and I suppose you could say the mining industry abandoned Europe in many ways because of that. The only way to re-establish the trust and confidence is to be there every day with your children in the school, talking to the regulators, the community, the people every day. And that's what we do. The company in a nutshell. Today we're capitalised at about $250 million. We're initially listed on AIM in London, and we dual listed on the TSX 2 years ago. This is a mining field that has several mines on it. Its average grade historically was well over 1% over the field. But we're starting on an open pit with reserves on it today, and we will expand reserves and re-establish the other mines next. All the numbers, however, are based on the first. We've hit those numbers with the cost of the acquisition on the full site, and the cost of closure and rehabilitation of the full site. This is really, in a sense, 2 projects in one. One is the environmental remediation of a long-standing and contaminated site by introducing the latest environmental practices and rehabilitation techniques. And the other project is the economic development project. Spain, as everybody knows, is suffering economically. Therefore, the importance of the project has elevated right up as compared to when I first visited Spain in 2007, when the economy was buoyant and mining was not particularly at the top of the list, to put it mildly. Yesterday, the day before, we were hosting representatives of the Andalusian government, where our project is, coming to PDAC to promote Andalusia to the mining community of Canada. So it's quite a different situation today. 3 key topics that we brought this project to by the end of 2012. Engineering, Final feasibility completed, 43101 updated, issued a couple of weeks ago. Financing put in place in terms of mandated project finance syndicate. Parties locked in, some of them their money already in, and that's gone to agreed term sheets and it's gone to detailed documentation. And the third thing is to take the permitting process to the point where all the documentation had been submitted and the permitting could go into execution mode. So we're now in the execution mode, having taken, if you like, having re-engineered the site, financed the site, and engineered, signed off the engineering. Now we've taken the permitting to the point where we can trigger execution on the permitting and finance, and I'll take you through that shortly. The history of the company on one slide. I won't go over it. I've re-emphasising there more or less what I've already said to you, with a few other little details thrown in. Just a couple of, if you like, particular points. This site was left in a mess, and it's taken a long time to rectify that mess. I don't mean environmental mess. What I mean is a corporate mess. Rio Tinto Corporation moved on in the mid-90s, mid-1990s, and gave it to a workers' cooperative. Sounds strange, but that's what happened. And it was a disaster. It failed. There was misbehaviour, financial collapse, infighting. You could write a saga if you wanted to. Went into liquidation and jumped forward many years. We took an option over it in 2007. And it took us a couple of years to put the corporate back into a clean situation, 100% ownership of the minerals and plant and the mines. And the last piece of the puzzle in a corporate clean-up sense was August last year, 5 or 6 months ago, when we reconsolidated all the land holdings. They had been chopped up also, and we put it all back together. Essentially, this slide is just making the point that one of the key reasons that we feel confident, comfortable with risk mitigation on a project of this scale is that we don't have to spend the $1 billion that one would have to spend to establish it from scratch, because it's already there. It's already established. Roads, infrastructure, plant, tailings dams, pre-strip, it's all done. It was suspended. It wasn't finished. And it was suspended when copper was under $1 a pound. Hasn't been a drill rig on it for over 20 years. It's remarkable to me. This was the irresistible opportunity of Rio Tinto to our company, that all that inherited infrastructure was sitting on a site, silent, in the middle of a metal boom. Remarkable. And the world's largest VMS system hasn't had a drill rig on it for over 20 years. Remarkable. Funny things that happen in the mining industry. But someone had to clean up the mess. And you might say we had the tenacity or the masochism or whatever you want to call it to have cleaned it up. That's some photos of the site. The primary crushing, secondary grinding all have capacity well in excess of the base case. The thickening and the back end of water treatment and so on will have capacity well in excess of the base case. And the flotation, we're starting up at the base case, 9 million tonnes per annum, about 40,000 tonnes of copper per annum in concentrate. Reserves on the main pit, ignoring the underground deposits. The reserves done at $2 copper, I suppose another sort of reminder of trying to be conservative right up front. $2 copper assumed for cut-off grade purposes, for reserving purposes, for then cash flow planning purposes. Obviously, we can now, with the benefit of hindsight, say that was a little bit over-conservative. We can adjust that as we go forward. The grade about average for a new copper project in the world. But again, our intention is to supplement that with the sweetened up higher grades from underground in due course as well. Produced about 2 million or 1.7 million tonnes of copper historically, this site. It'll do the same again in our judgment. This is reiterating what I've already mentioned a couple of times, and that is that this isn't about simply starting on a base case and then closing and rehabilitating the site. That's not what we're doing. What we're doing is using the base case as a stepping stone to reactivate the whole field. It always was a multi-mine camp. So it's not going to be a one-mine camp next. It will again be a multi-mine camp, the largest copper deposit in that part of the world. And it's just it's terribly sad, really, that it hasn't been operating for the last few years and enjoying it and generating employment in an area that suffers 50% unemployment. It's really quite criminal the way it was left in such a mess, in a corporate and legal and whatever sense. And, you know, it's a wonderful opportunity to re-establish production. You know, most mining companies would die to have the community support we have. Our community wants their mine back tomorrow. They want their mine back tomorrow. It's the engine of their community. The 7 villages around this mine always have been there for this mining property. They want it back tomorrow. And it's only been a cautious, fairly slow, grinding permitting process, tracking a few steps behind what I would call a slow, grinding clean-up process of the corporate and commercial mess of the thing, which is now done. So we're at a very exciting stage now. You can miss out on the brain damage that my staff and I have suffered for the last few years, putting this all back together into a nice, clean shape. However, you are now here fortunate to just look forward to the execution stage of executing the permit sign-offs and financing sign-offs so we can trigger construction in the second half of the year. These are the numbers on the base case I've mentioned before, after having hit them with the project acquisition costs and the closure costs for the whole site. It's, if you like, the upfront social cost. The entry ticket is to take the legacies, define them, rule off on what they are, and commit to pay for them. Clean it up, bring it into the 21st century in an environmental sense also. To me, the most important headline numbers are the total cost, capital, operating, closure, all wrapped into one number, and written off against the starting position, ignoring all the blue sky, and that's about $1.90 a pound, which is very respectable compared to the average new copper project in the world today. It's nearer $2.50 for that number. Based on what we perceive to be the expansion track we'll take of firstly increasing reserves on the main pit and then moving on to the underground, we feel that there's significant potential to improve quite dramatically on these numbers within the first few years by simply drilling out, infill drilling the main pit. It's a bit too busy to go through here, but the most important thing to me is to have also, and I must say I'm sounding sycophantic about referring to the previous speaker, but I couldn't agree more with the philosophy of having the senior people on the ground all the time, drilling it down every day. And the Gantt chart that we have, even on the permitting, is on the desks of all the civil servants who are dealing with this, and on our desks, and that's bird-dogged every day. That's just the permitting, let alone the engineering and all the other things one has to do. There's no substitute for being there. Our construction management group have been on the ground for the last 12 months so that when this 43101 was updated, it had the, if you like, the ownership of the people who'll be managing construction, including the local detail engineering specialists who work with them. As you can see, the plan is to start construction in the second half of this year, phase 2, and then the first diamond is starting up at a 5 million tonne per annum rate, 25,000 odd tonnes of copper in concentrate rate in the middle of next year. And then the last diamond is getting up to the base case level of 9 million tonne rate, about 40,000 tonnes of copper in concentrate. The reason we split that into 2 phases is that whilst we're in the refurbishment works, which is mainly replacing all the electricals, all the plumbing, some pumping, and 1,000 other small line items, but all the big gear is already there, other than a water treatment plant that we're installing for the first time on the site. But the reason we've split it in two is that whilst that refurbishment work is taking place, we'll be going hell for leather on the drilling programs to increase the reserves as fast as possible on the main pit, so that when we get to that first diamond, the chief geologist can have the luxury and the fun of tabling to the project director the fact that he doesn't have to take it to 9 million tonnes per annum, but he can plan to absorb some of that excess capacity in the plant, expand the flotation circuit and take it up much higher from the beginning. So that's really why we split it into two. Bank on the lower number if you like, but go for the higher number. Financing, it's been a very tricky period of time since we floated the company. 2005, a global financial crisis, quite a paradox really that metals are so strong and so on. And you know, I don't think we'd all be in this room if the metal markets were not so strong, given what's happening in the financial markets. I don't know how all the world's economists didn't know China was coming, but there you are. And thank God that for the Industrial Revolution in the Eastern Hemisphere. It's billions of people industrialising that are driving our industry. And as a result of that, we are well positioned. Our company is well supported by very strong shareholders, including management. But where we are today, we need $250 million to start it up. We've already arranged 225 of that, 10% to go. The last 10% will be via a bit more off-take linked finance. We've raised in the past equity at a significant premium in exchange for some rights to buy our product at market prices in the future, only on the base case numbers. In other words, the customers get the right to buy a percentage of our base case production, not the upside. In exchange, they've provided equity at a premium. We are looking at royalties and silver streams and so on, but they don't look particularly attractive in today's pricing, based on what I've seen. Oh, we could just do some ordinary, normal vanilla equity to raise the 10%. That's roughly our market cap as well, so it's roughly 10%, if you like, of the capital requirement, and coincidentally about 10% of the current market cap. Funding in stages. We've certainly done that, starting the company as a $6 million company and funding it as we take each step along the way, and bringing people with us and crafting the share register and the finance register with us. Very important. Building a partnership of people in the ethos sense of the word. Our major shareholders have sat down with the government several times. It's a partnership approach. Make sure everybody's coming with you. That's the most important thing to me. Transparency, integrity, and making sure that everyone's on the same page without mismatching expectations and so on. We've deferred much of the acquisition costs into the project cash flows. It's another, I suppose, risk mitigating technique. Reliant on equity funding to date to avoid, the calamities of debt prematurely. Debt finance linked to offtake, again, to minimise the cost of capital. All our debt providers actually want metal or copper concentrate. As you know, Goldman Sachs, JP Morgan have announced ETFs of copper. Copper is the new gold. It's being securitised, so to speak. And they want to be paid in metal, not cash. It doesn't make any difference to us as long as the pricing's fine. So it's using financial, sophistication, if you like. But the most important thing is bringing people with you, I think, all along the way. Our stock has been a relatively stellar performer in that it hasn't gone down for the last couple of years. It's gone up a little bit. I suppose people can smell that it's coming, and it's near-term cash flow, one of the few copper stocks that's knocking on the door of production, so to speak. Shareholders, all of those shareholders really, except for RBC, have all played a role or are playing a role. RBC, as you know, an institutional investor, but the others that are named there have all played a role. It's not a partnership, but that's the way it sort of operates in the sense of everybody having pitched in one shape or another. Two of those parties are customers, strategic cornerstone customers as well. Rumbo is the landholder, the last landholder, the big landholder that we bought out, turned a problem at the time into an ally and supporter, very strong local business person, very strong supporter. Astor was the vendor, had foreclosed on the property, and we turned that foreclosing creditor into an ally and a supporter of the company, very strong supporter. People, you wouldn't know these names, but Bill's a third-generation copper man from Arizona, has run much bigger sites than this. Rob was Deputy Director at Olympic Dam before he came over to be Project Director here. They're all, thick-skinned, have been around a few years like I have and been through these sorts of startups before. You need that experience to set it up. The board represents shareholders, but also a blend of skills, former operators, accountants, metal people, and so on. Former regulator of mining in Spain on the board. And that's where we are. We own 100% of the Rio Tinto copper field, really, we should say, not mine. All the land is now put back together, 100% ownership of the minerals, 100% ownership of all the land, all the plant. Don't have to pay for $1 billion of inherited infrastructure, but have to spend 250 to get going. Financing package mandated and to some extent locked in with the customers who have already put money in, and everyone's agreed the term sheet. They're waiting to go to credit once the permits are signed. Fully equipped mine site. As I say, the government has turned full circle from feeling that the mining was no longer relevant to being mining at the top of the priority list. And very experienced people on the ground. Thank you very much for the opportunity to introduce the company.
Thank you very much, Harry. We actually have a couple of minutes here if people want to step up to the microphone and ask Harry any questions. Please just step right up. Thanks.
Just one question, because Rio Tinto is a very old mine, very old district, so that means 2,000 years of mining still under Roman time. So what happens now with the old historical heritage, let's say? Because if you go to Huelva, if you go to southern Spain, it's kind of a very important place where people from all over Spain visit to see this. So how much does this influence your scenario for production there at Rio Tinto?
There's a number of dimensions to the answer to that question. Firstly, from the point of view of, let's call it cultural heritage, empathy with and respect for cultural heritage, we already have launched the EMED Tartessus, which is our subsidiary in Spain, the EMED Tartessus Foundation for Economic Diversification, that will have allocated to it 300,000 euros a year when production starts. And everyone who makes money out of the mine, employee or supplier, will twist their arm to put 1% of what they make out of the mine into the foundation as well. And that foundation will have the task of facilitating heritage tourism, which already is quite strong in the district. There's a very good mining museum about the mine and the field, and there's a tourist train, a steam train that you can go around to all the old sites. So we're very sensitive about complementing our, if you like, mine development work with economic diversification work, which essentially is focusing very much on the heritage aspect. Another aspect to it is, what about, does it bump into physically, if you like, physically does it constrain? Not really. I mean, there are a couple of exceptions, but essentially it doesn't, because most of the old sites have been put aside into a heritage trust, which has nothing to do with us. But the mines themselves are not heritage frozen. The mines themselves are there to be developed, and the government's, more than ready, because it's what it wants to happen. It wants the mines to be developed, but at the same time the heritage down the road to be respected. There are a couple of sites on the mine we have to be very careful about. at the edge of the mine and so on, but we'll do all that, and archaeologists will do all that properly and so on. No more questions?
Sure, step up,
sorry.
please.
I just had a quick question with regards to your figure, $250 million you said, that would be required to bring the mine to production. How definitive is your figure, given that a lot of capital cost projects overrun? And I have a follow-up question as well.
Well, just on how reliable is the number, if I can go back. Obviously, the big number is the first line, and that's the number that is susceptible in many, particularly greenfields operations, because of the large procurement jobs and delivery risks on large procurement jobs. This isn't like that. This is 1,000 small jobs, not large procurement jobs. So the issue is not, are we at risk of capital blowout in terms of the cost of equipment or anything like that? It's not that at all. It's scheduling and execution management that's the key here. And that's why we've had the construction management people on site, over the last year, so they have ownership of the numbers as well as the management and any independent consultants. The only number that hasn't been, if you like, fixed or locked formally is the second line, because the bonding is only set after the environmental plan is signed off. The environmental plan is due to start getting signed off like right now, this month. And that can't be formalised and agreed to, that bonding number. If it, I'm just being hypothetical, if it blows out by $10 million, well then it's an extra $10 million we have to raise. But the most important thing is that we've already raised, essentially we've raised the capital in essence, and then there's just a little bit to finesse at the end now.
Were these costs developed in-house, or was it developed by a consultant?
I'm sorry?
Were these costs developed in-house, or was it developed by a third-party consultant?
Well, they were developed in-house and then checked by the company's own reviewers for the board, and then checked by the 43101 independent expert. So everybody, really.
Thank you.
Great, thank you, Harry. We still have a couple minutes here, actually, so I'm just going to...
Boy, was I so quick?
Yeah. That's right. Yeah, he's ahead of schedule as well, so that's great to see.
I can go back to the beginning if you like.
Start all over. Exactly. Here we have a question right here.
Thank you very much. Gracias. Do you have any union problems?
It's a heavily unionised culture. If you go back to the little story I told about in the mid-90s, Rio Tinto Corporation decided to move on. It did a number of things. It sold the smelter to Freeport. One of Europe's big three smelters is in Huelva, which is not far away, an hour-and-a-half drive. Sold it to Freeport. It put large areas of land into a heritage trust, which we've talked about with the museums and so on. And the mines and the plant it gave to the workers, it was a Communist Party, Labour, union-run company. And it failed. Not only heavily unionised, but actually union-controlled, you might say, in the 90s when it failed. And then it went into liquidation, and then mining was no more in Andalusia. The great Iberian Pyrite Belt, Andalusia, no base metal mines. Very strange when you look at it historically. And you might say the workers had the last shot at it and stuffed it up, really, you'd have to say. And then jump forward to now, it's certainly not a Labour-owned company, if I can put it that way, in terms of union-owned, but it's very much hands-on hard workers, and I'm a worker owning it. The unions are represented, but there have been, in the last few years, 2 other mine startups in Andalusia which are prominent. One is Las Cruces, a beautiful deposit, 5% copper, run by EMED. And another one's Aguas Tenidas, which has an underground mine not far away from us, not dissimilar to to one of our underground deposits. Both heavily unionised, but they've, if you like, paved the way with collective agreements, with today's rostering and work practices and so on and so forth. So we don't have to pave the way. We're following suit, if you like, and in some respects the heavy lifting of establishing new enterprise agreements and so on has already been done ahead of us. And the unions are terribly supportive, I have to say. You know, one of the most supportive stakeholders we have, really, because they want jobs as well for everybody.
That's great, Harry. Thanks, thanks very much for that. That was a very interesting talk. And do you have a booth?
No, I'm sorry. I'll
Right.
work it out for next
These
year.
guys have been too busy on the project, so next year come by the booth. Thanks again, Harry, talking about the Rio Tinto mine. We're looking forward to seeing that historic mine come back into production.
Thanks, John.
Great.